What type of policy loan provisions does Allianz have? Allianz has some great loan provisions. So there's basically two different types of loan options that you can choose from. One is the participating index loan, which is the one that I use and the one that I recommend. That is a 5% fixed loan rate. It's fixed for the life of the policy. Will not go up, won't go down. With that 5% loan, none of your cash value gets taken out of the index. So your policy, all of the cash accumulated in your policy is still going to grow each year based on the index that it's tied to. Now, the indexes that I like to use have no caps. Allianz is one of the only ones I'm aware of that offers no cap on a good performing index. In this case, it's a volatility index. There's two of them. And they give you 145% participation rate. In 2017, the actual return on that index, what it saw, was over 14% return. So what that means is we take that 14%, we multiply it times the participation rate, 1.45%. That gets us up to a 21% credit. Now, we're not done there because I pay 1% asset fee to get a 40% bonus on my policies on that index. So you take that 21% and you multiply that times 1.4. So the actual credit that year would have been 30%, just right around 30% credit. So if I borrowed out all of the money that's available in my policy and I was in that index in 2017, I would have paid 5% for what I'm borrowing, and I would have got a credit of 30% on all the value that's in my policy, including that amount that I borrowed out. So it's a hell of a deal. Hell of a deal. And it's had a number of, that index in particular has had a number of good years like that. Over the last 15 years, it's averaged just under 8% return. That's not counting any of the bonuses. So you get a 40% bonus on top of that. It basically would have averaged over the last 15 years almost 12%. It was like 11.99%. Solid. Especially when you can't go backwards. You can't go negative. When you can't go negative, that means it's all compounding. It's all compounding year after year. Even when there's a negative year or a 0 year, you don't go backwards, except for the cost of the insurance. But when you take out those negative years, the compounding is just massive. If you think about it, if you're in the stock market and you get a 50% drop one year, you need to get 100% return in order to catch back up to where you used to be. With these policies, if it goes negative, you get a 0% credit, and the very next year, it starts over at that new rate wherever it ended the year before, and so as soon as it goes up, your value starts to go up. So it ends up looking like a stair, kind of like stairs, because any 0 years, it's going to be flat, and then the next year it'll go up. So yeah, really, really neat way on how those work. Let's see. Oh, and then the second loan option provision that Allianz has is it's basically a wash loan provision. What they do is in the first 10 years, they will charge you almost 3% for your loan, and they'll credit you about 2% for your loan. After the first 10 years, so 11 and beyond, they'll do a straight wash where they'll only charge you 2%, but you only get a credit of 2%. Sounds okay when you think about, 2% loan, that's great. Yeah, that's good, but you're only going to get a 2% credit, so you're limiting your upside. In the case of that 2017, you're going to miss out on a whole lot of gains, depending on your loan size, but you're going to miss out on a whole lot of gains by not getting that 30% and just getting that 2% credit instead. So I like the participating index loans just for that reason. I would rather know that I'm going to pay 5%. I'm okay with 5%. That's a pretty good loan rate, regardless of what the interest rate environment is out there. So we're in a low interest rate environment now, so that 5% seems like, maybe it's higher than what I could get somewhere else. But if we get back to a different interest rate environment where car loans are 8% or 10% or 12%, which they were not even 20 years ago, that 5% is going to look pretty nice. It's going to look pretty nice. So those are your two options for Allianz. I hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time. Now go maximize your cash flow.